Well, this move right here either scared the hell out of you or made you very, very happy. Hey guys, it's Keith Allen, and as you can see, Bitcoin with a lot of volatility and some changes in the order book on the overnight. So let's climb in and see if we can figure out what led to this. Hopefully, I can talk you off the ledge, or I don't know, maybe I'm going to push you a little closer to the edge. So let's climb in and take a look. First of all, obviously, that ETF narrative has been a big one, along with the halving coming up in April. And as you can see, yesterday, those net inflows were much, much lower, only 132 million, anchored by 345 million into BlackRock, 257 million out of Grayscale, and some very low volumes on the other entities here. So this, to me, kind of illustrates the fact that these institutions offering these products are figuring out how Bitcoin trades, and they realize that things are pulling back. They realize that the market has been on an absolute rip, and that rip is due for a correction of some sort. Whether what we saw in these past 24 hours is going to be the total of the correction for now, or we're going to see something deeper, remains to be seen. But this correlates very well with what we're seeing across all markets here. As you can see, the markets are very correlated here. Bitcoin here up top, coming close to that 21-day moving average. Same thing for the S&P. Dow Jones, not the same in terms of moving average metrics, but still, all these markets seem to be correlated at this point, as S&P and Dow have been at record levels as well. So let's now take a peek at the candle chart and see how this translates. Let's go a little bit narrower here. On the daily chart, you can see we cleared the all-time high after a couple of tests, right? This was all very strong, right? Strong, test, retest, breakout, and then come back down a wick below. Then we saw this full candle body, and I think the market got very excited here, and we got another retest of resistance, which we could see here in the order book on fire charts, but things started breaking down from there. And my concern is that we've yet to see those full candle bodies consistently above this level. We had just that one. So on the weekly level, I want to start seeing full candle bodies up above this prior all-time high, the 2021 top. And until that happens, this breakout has not been validated, in my opinion. So watching for that to happen this week, obviously, it's impossible for us to see that. So we got to wait another week to see if next week's candle, right? Where's this week's weekly close going to come, and where will next week's candle take us? So for a green weekly close here, we need to be above the all-time high. So that's, last week we got it. Last week we closed just above it. We need to see a weekly close above the all-time high, would be bullish. But then we need to see that next weekly candle, full candle body above this level. These fake outs, the market's getting very good at these, right? So as you can see, overhead resistance to get into this lifetime channel, that's around the 75K level. And this is historical. These blue vertical lines, those are prior halvings, and the one we have coming up. As I illustrated to you yesterday and have been telling you for the longest time, we can see big corrections in the 20 to 40% range up to and through the halving. So don't fool yourself into thinking that can't happen. In fact, back in 2016, we saw a big dip here, and this one, that was like a 40% correction just a few weeks after the halving. What did that do? Let's see. That was like, yeah, there you go, 40%. So those things can happen. Be aware of that. And I'll just going to continue to remind you of that. So hopefully that protects you from getting wrecked and overexposed and wrecked. Really got to be careful with the leverage at this stage in the game. So, this is something that we've got to continue to watch, because, sure, we see some support right here, but it's new support, and new support sometimes is hard to trust because of, potential rug pulls. So even if we got this move down to the 60K range, what kind of a correction would that be? Would that satisfy those of us that are looking for that 20 to 40%? Well, if we made it down to this moving average down here, that's, That's the 21-week moving average. That would be legit to me, right? And lots of consolidation at that level. So that would really be probably the most legit move we could ask for at this stage. If we got it to 60K, that 60 to 62 range where we see liquidity right now, that's still not even 20% barely. So, maybe the ETF narrative says, those inflows will continue and maybe we only get 18 to 20%, or maybe this is all we're going to get. We had an 11% move. I just don't think it's enough. I honestly just don't think it's enough. So that's just my opinion. No trading advice here whatsoever. Trading is risky. Do your own research, manage your risk. You know the deal, right? But I just am personally conserving some dry powder for the potential to buy back down in this range, or hey, maybe even lower. There's still guys talking about going down to the 12K range. I just have a hard time seeing that move from here at this level. Doesn't mean it can't happen. Anything can happen in crypto. We know this is the Wild West, right? So let's go back to fire charts here and see if we can analyze the move just a bit, right? As I mentioned, we saw purple has been selling through much of the week here, right? As price got into these new ranges, every time we hit a new high, we see some distribution. That's to be expected, right? But the news really that led to this was this class, the red sharks joining the selling here from the other classes here. Of course, if you've been watching these analysis since the beginning of the year, you know that since Christmas, that red cohort, I call them sharks, have been accumulating a tremendous amount. This, to me, appears to be a TWAP strategy. It's been over $3 billion since Christmas, literally. And every once in a while, we see them start to sell, and we often see those moments happen when the TradFi market is closed, so the ETF faucet is off, right? And when that happens, it really kind of exacerbates the volatility to the downside because those inflows are on pause for the moment. Those ETF inflows are on pause. So as you can see, we do have some heavy resistance overhead, and we do have some support. Really, the anchor of support is down here in the 59 to 62K range. Again, we've had some prior history there, so that all works well in terms of technical analysis. This would be the 50K range, which also had some history, but we looked a few minutes ago at that 45 level where we had so much consolidation. That would be strong for me. This would be strong for me, 50 to 52. So as you can see, there's just not a ton here in this mid 60s range to hold things up unless we see another bid block come into the range. So that's kind of what I'm looking at. You can see resistance overhead. That's what, 65 million and another 58 million. That's significant. Those are the kinds of volumes that that tend to send price the other way, right? So as you can see, price will first move towards those bright spots, but once they get too close, they reject. It happens in both directions. So keep that in mind. I'll show you that here on the wider view on the 3-year chart, for that matter. So what do you do in terms of finding opportunities to build your position if you haven't already done so? That obviously is on everybody's mind, right? Just quickly showing you these illustrations of how price can get rejected or run from too much liquidity on the other side of the trade, right? So in terms of accumulating in this range, we're at kind of a risky level, right? It takes some patience and discipline for sure. I've shown you several times here over the past few weeks how I've been using the MTF mean reversion indicator to pick up incremental entries along the way. And gosh, yes, I was feeling so good about this on that double bottom yesterday. But then when this move started, it was like, we're going to see some more drawdown, and we did. So what I've done, I have. For those not familiar, mean reversion is a very simple principle that price likes to revert back to mean. That happens in both directions, from above and below. The white line here in the center is mean, and as you can see, price springs back each time back into that direction. So I have a series of bots at different deviations running, and at this point, I've turned off the lower deviation bots. I still have my mid-range bots up and getting some scalps in with those, but I've got my really high deviation accumulations bots going on with deep deviations. And these, to be honest with you, I'm not planning on selling these, right? If we get these dips, these will go to the hodl stack. And so I got 10, 20, 30, 40% deviations, which would trigger if we get a move down to the 60K level, the 55K level, the 47, 48K level, and right here, the 40K level. Okay, so it's not an exact science, and this, of course, is going to change as price action moves and, up and down throughout the market cycle. But I'm just saving some dry powder, putting them on these bots, using bigger positions than I use on those low deviation bots, and those will, like I said, those will go in my hodl stack. So if you're interested in learning more about that strategy, I'll post a link to how I do it in the description, so you can check that out as well. In the meantime, one last look at fire charts for the day and see if we can hone in on what we might expect. You can see a little bit of overhead resistance just came in. It's not a ton. 10 million, significant, but certainly not insurmountable based on what we've seen here as of late. The concern is that the selling continues down here. You can see all classes, including red, are still selling at this point. So my expectation is we might go lower before we go higher, and you got to be prepared for that. Hope that helps you out and gives you some insight, at least some different perspective of what you might expect out of the market here in the near term. And of course, our long-term sights are obviously on getting back into this channel and in my opinion, real price discovery happens when we get up in here, because this is the upper atmosphere of outer space, right? This is where the rocket wants to go. We got to break into this first. We first have to have full candle bodies above this prior high at the 2021 top, and then we got to start building up in this direction if we really want to see the numbers that everybody is dreaming of. You got to be patient and wait for it to happen. We could literally chop up outside this range for months and months and months, and maybe even never make it in, right? So, up above this level and below this level is still obviously bullish, but this is where the real big explosive moves are going to come, is if we can get up above this level right here. Again, hope that helps you out. Nothing I say or share should be considered trading advice in any way, shape, or form. Trading is risky. Do your research, manage your risk, and stay in this game for the long haul. Thanks again for following. If you like the analysis, please smash all the buttons and help me blow up this channel. Really appreciate the support you guys are showing me, and appreciate the comments. Keep them coming, and I will respond to each and every one of them, as I do every day. Thanks again, guys, for following along. Have a great day and trade safe, my friends.